Today we're going to do a more Forex focused type of video in comparison to NASDAQ and deep diving very much in depth into Bitcoin. For Forex, my approach is generally the same. However, the new day opening gaps and new week opening gaps sometimes they're not as respected as gold, and in particular, NASDAQ. It's like a 50-50. Sometimes it'll run straight through it. Other times it will bounce off of it cleanly. But on gold, where you see situations or setups like this, where it's very, very nice, sweeps liquidity. At the same time, on silver, there was an opportunity here. I'll lock that in. Lower high, higher high at the new week opening gap, touched into just shy of 50% of the new day opening gap. Fell back down, consolidated, did whatever it did at the open. SMT was created, immediate rejection down lower. Right? So went to just a little bit more than the new day opening gap. The new previous day high and low, high or low. From right there, just about almost filled in the entirety of the gap from this previous day, from Friday to Sunday. So from there, this could not be any better of a setup on the new day or new week opening gap. Even during the London session, if you see SMTs, opportunities for SMT that present themselves here, you can even see how this one was relative equal high. Then it went into a lower high. In contrast, you have the higher high and another higher high immediately afterward. So from here, there are two opportunities. This is a double down SMT. It's like back-to-back SMT, what I call it back-to-back. So you have higher high, relative equal high, higher high, lower high. This is a strong sign of weakness. And I would probably enter on the way down from this because remember, the manipulation of the wick has to make the manipulation of the wick on the high end. Notice how it went to 50%. Then it goes in the real direction. So the way that I would trade this is it would go from here, leave that just one or two ticks above that, just for comfortability in my own mind. Look at that gap down there. You see that? And notice how it ran straight towards London liquidity. Although it didn't take it out, it went to the same, tick for tick, same thing. But now it ran through this time. So this is why I say play it conservatively. People will have their stop or their take profit right at that low or a little bit more extreme. And if it's not going to get hit at once, maybe it'll hit it twice, maybe it'll hit it three times. But no, it never hit it. It came back, hit your SL before it would continue down lower. If a 1 to 8 is not enough for you, you're a greedy bastard. That's my opinion. But from here, look at this new day opening gap right there, just sitting there waiting for you. Right there is perfect. Right here is more than enough. And on top of that, you're going for a new day opening gap. So that's a very high likelihood of hitting. But from here, I'd probably play it conservative, and I'd probably go for all these lows right down in there. That's where I would go, me personally. I know a lot of people will go for too much or too little. I know a lot of guys, I watched a lot of videos here today about a lot of guys that really just can't trade well. And whenever I say that, I mean more of like getting in too early, taking profits too early, and letting your losers run for far too long. And these are mistakes that you'd make as a beginner. I'm seeing very seasoned traders make these kinds of mistakes. I'm like, at some point, you got to jump out of the nest there and start flying on your own because the stock market's not going to, forgive you. It's a one-and-done deal. And if you're not able to weather those kinds of conditions, you're not willing to bow down to that rule, you're just going to be butted up, with the rest of the guys that'll never make it. So in my seasoned opinion, be more conservative and enter with a large amount of confluence. Now, what does confluence look like? Confluence looks like this. You have a new day opening gap, new week opening gap. You have a level of resistance above that. You see how the market has a great draw of liquidity down below here. And on top of that, we have these lows down in here that we're looking to take out. And on top of that, we're on a daily bias downtrend, right? We've been on a downtrend for a while. Overall, it's consolidation really more than an uptrend, but it's been trending up. Then you had these big down move, right? And now we're seeing a bit of consolidation. We're looking to fill in some part of this fair value gap in here. So I might as well outline this fair value gap in there. But we're looking to have at least a level of resistance within that. And back on the 5-minute time frame, you'll be able to see that fair value gap, how it just pierced through it. and we have a level of resistance at that fair value gap. You can see that the fair value gap, we had a bit of resistance. Not only that, but we have the new week opening gap here, new day opening gap. It had a resistance on there, did not want to hit it twice. And from that, we have the SMT taking out the Asia highs there. Took out the liquidity and started to drop down lower. There's 8 different things. There's 7 or 8 different things that we just mentioned. I just mentioned that would make this trade noteworthy for us, right? And not only that, but the discipline will be a very large factor in this. And, we'll talk about that in a different video. But not only do you have the discipline and all the confluences there, the market, it seems to me like it's literally telling you that it wants to reverse down lower. Now, you can even see it was disrespected on this candle. It made relative equal highs here. Then it pushed up and made a higher high. So you could even take this candle over here and make it live price action. All right, we'll go from there because in a live environment, that'll be your area, right? So from here, imagine that's your low, right? Now, if that's your low, you get in a short on this candle, made its high, whatever, decided to go back down lower. So you get in short here. Your stop loss is still probably near this high. So if that's the case, you still would not be taken out for a loser prior to the market starting to go in your favor, right? But what I'm seeing is a lot of people, just entering in this short blind, and I was like, well, I might as well wait for the 50% to see what it'll do, right? Now, if you see a level of rejection on the 50%, then I would probably just enter probably on this candle here, right? So as it starts to go up, it starts to go down and closes beneath that, that'll probably, that's interesting to me. I want to be looking for a short opportunity in that candle. So in here, that's whenever I'll start to look for a short. Of course, you're going to have some level of drawdown within that. And you also have what ICT calls as a rejection block. I never use it, but it's there. To the tick, what was that? That's the other fair value gap. So the fair value gap hit just the bottom of that fair value gap, and the rejection block hit 50% of the rejection block, and then it jumped straight down. So that's another confluence there, hit 50% of the rejection block before it started to drop down lower. So tons and tons of confluences there of reasons as to why you should look for a short opportunity. And considering all those things, I mean, from here, you can even see the new week opening gap is here. Just from this past Sunday, the gap was here. So, or the high of the gap was there. So play a little bit conservatively, go for a little bit higher. That's just about 1 to 8. So that's, plenty of opportunity there. But even if you want to go for all that, wait for it to start to reverse down with displacement, you could wait for that. If not, at least have a level of a stop loss that'll go to that high, just to have a little bit of wiggle room, just in case your trade has a bit more drawdown before it starts to go in your favor. So you would have a little bit extra room above to have that level of cushion there, right? That's why I like to operate from a lens of, what would you say, conservatism rather than being aggressive. So with all that stuff being said, let's go down to the 1 minute time frame, and let's look at this here. So what I would usually do if the market wasn't so, this is the Asia session here, so it's not a whole lot of liquidity here. But what I would usually look for is whenever the SMT would be presented, I would look for the market to have a bit of like a wick or two. I'm sure we can find an example here somewhere. So something like this, right? So you notice how the market created the SMT. They created a fair value gap, and then it filled in the fair value gap. And then as it starts to push up, that's my entry. Right, that's exactly what I'm looking for, exactly what I'm talking about. So whenever stuff like that happen, that is whenever I'm most interested. Usually that happens on the New York AM session more than anything else. But if we're looking at this here, you notice how after the SMT fair value gap was presented, that right there would be a decent short opportunity with a stop loss at the high. And then notice how volume balance fed into it and then dropped down lower. That could be another entry short for pyramiding. As far as any others, to see what other trades that we took. As far as the double SMT here, exactly what I'm looking for here is pretty much the same, but this one rejected immediately. Did all of the work that I needed to do afterward. It took off. Now, I do want to look for a cleaner example just to see if we have any. That's a lower high, higher high. Market wanted to take me out. Whatnot. You're going to have some losing trades. It's just the way that it is. But from here, we can see if we have any fair value gaps or anything like that. But you get the general idea. Higher low, lower low, you want to see a level of like a fair value gap, volume imbalance. And here was respected. You can see that, right? So we have a nice volume imbalance from the high to the low. These candles right there. And you also see the remainder, right? So you have two different volume imbalances that you could look for. So the one that's in total and the one that's left, the one tick that's left. So from the one tick that's left, that's the one I'm going to be paying more attention to. But you can obviously pay more attention to the one that has the total fair value, total imbalance. This is up to you really. But from here, I would have my entry a few ticks, 1 to 2 ticks above the a few ticks above the volume imbalance, and that way I have just that much more wiggle room, because you'll see at some stage very soon you will notice how volume imbalances will sometimes not even fill in completely prior to reversing opposite direction. It happens very quickly, so you have to be ready for it. But that was not the best example either. But NASDAQ does this very, very well. So we could take a look at NASDAQ before we get back into Forex. I just wanted to show you the differences here. But same thing here. SMT was created. Displacement. This is the first opportunity here. What's so funny? Displacement right at the 8:30 a.m. candle. Displacement. 2 candles, right? Create that fair value gap in there. And notice to the tick how amazing, right? How amazing this strategy really is, and how ICT concepts, I'm a big fan. So volume imbalance, you notice that went almost just 1 tick shy of that 50%, and then it went in the opposite direction. So from this, I mean, this is exactly the kind of setup that I'm looking for as far as like the 1 minute kind of things there. But for Forex here, let's finally get into it. This is the bread and butter setup that I'm looking for, right? So you have 1, 2, 3, 4, just about 5 swing lows the market takes out. Immediately afterward, we have this SMT, right? So you have a higher low, relative equal low, and then it immediately runs for liquidity on the opposite end. So this here is a very large amount of pipettes here. So from this low all the way to this high, you have roughly 130 pips, right? And from there, there's a large amount of opportunity. I only took, 44. There was, just about 90 left. So, I mean, if that's the case, then we could ask for, a little bit more, because we're looking for a draw on this liquidity, right? So we could even look for London highs. I can't adjust it now because the trade was already taken. But from this entry all the way up, it's probably, let's just do the math here. Looks like 60 pips to me. So there's 60 pips. You can even ask for this high, the new week opening gaps up in there. Look, it filled it in completely. And what a coincidence. As soon as it fills in the new week opening gaps, it reverses, right? That's why I pay attention to these confluences and how important they are. You can see immediate rejection, even from here, large choppiness, because it did not want to take it out. And from here, that's an SMT opportunity. So from here to here, that's a reversal in between the New York AM and New York AM lunch session transitions. From here to there, there's PD arrays that take care of that from 10:50 to 11:10 or whatever. And from there, I don't even pay attention to those PD arrays or whatever, the timing. I just look at what's happening on the chart, and it's, whatever the price is going to do is whatever the price is going to do. And regardless if it's happening at 2 a.m. or 2 in the afternoon, it doesn't matter anything to me. But from here, you notice how the lower high, this one would be a higher high from there. I guess it would be from here to there, but it's not exactly the cleanest example, but you understand what I'm saying. Choppiness, broke down below it, then it went above to take out more liquidity, I suppose, and immediately went back down lower. You notice how new week opening gap consolidated, pushed back up, went to the 50% on new day opening gap, and immediately dropped down lower twice, these swing lows, and then pushed back up, consolidated at the new week opening gap, went down below, down here, and then immediately reversed and then just expanded super high. So just this new day opening gap, this new week opening gap, and some here for the TPs, this is really all you need to build a very, very nice couple of trades. And this is just in one day, you understand? So this is one asset on one day across multiple that I'm looking at. So you can understand how the opportunities stack up very quickly, especially whenever you have 9 monitors, right? So 1, 2, 3, 4, 5, 6, 7, and the other two are taking care of my P&Ls and whatnot. So I also, that doesn't matter. We'll talk about that later. But considering all these things here, I mean, Forex is very similar to that of, very similar to that of gold, but it has a little bit more structure. But the personality differences are a bit different. But yeah, from here, I mean, it really is just a bread and butter, and you can see how liquidity is very much respected. Now, first of all, the reason why I'm trading British pound versus the New Zealand dollar and the euro and the New Zealand dollar, I've touched on this before, but I use a website. I can't remember what it's called now. But essentially what I was looking for, Mataf, right? So Mataf.net. So this is a volatility indicator, I guess, whatever you want to call it, database. And it looks at all the pairs, and it also looks at all of the volatility between them. Whichever one was the most volatile is the one that we're obviously going to take or going to trade, because within the past couple of weeks, it has performed the best. So I don't trade any crazy, ones like these, the Turkey or whatever, gold versus blah, blah, blah. I'm not trading any of that stuff. All the African ones, I'm definitely not trading. But pound New Zealand, and you see pound Australian and euro New Zealand are top three. So pound and euro. The reason why I traded pound New Zealand and euro New Zealand is because euro and pound are one of the tightest correlated assets on the entirety of the Forex market. So pound and euro, they're both on New Zealand dollar, and they both moved roughly 120 pips, and so moved 97. So roughly 110 average between the two, and that is very attractive to me. I'm looking forward to trading these two more. But pound Australian, I'm not sure what that would be. On this one, the correlation tool, we can see on the 5-minute time frame the correlation between pound Australian and the one that would be tightest to it is euro Australian, obviously, because pound and euro and Australian is the same thing. But that right there would be an opportunity that would replace this with here, right? So instead of British and euro Australian dollar, we would do GBP AUD, right? And EUR AUD, mainly because Australian dollar and New Zealand dollar, they're going through some things with reserve banks and all that. They're taking care of some things and exchanging money around. But this is exactly the same thing. So I recently been looking at this asset as well, and you can see the volume imbalances there. You can see the difference between the New Zealand dollar and the euro, and British pound and the euro, and you can see how they're inversely correlated from this way. Obviously, because it's Australian. Anyway, you get the idea. But from here, right, if we bring this back, you'll be able to tell. It's not exactly copy paste inverse, but you get the idea here, right? So the 1-minute time frame, you can see the difference. You can see it in depth, right? Now by difference, I mean the difference between the two assets, how they're correlated at these small areas. So made a lower low, made a higher low, and from here, fair value gap dipped into one more time, and then immediately, look at the respect right there. I mean, to the pipette, you know what I'm saying? Just about perfect delivery, and from there, move straight up. And you could, if you wanted to, you could have it just about there, and that would be enough for you to, or that could have been another opportunity for you to get in here, but it wasn't that bearish, so wanted it to leave it and do its thing. So from these two opportunities here, I mean, this is, my bread and butter is trading the SMTs at important areas. I've been doing it for, a year and a half. I've been trading SMT for 2 years. I've been trading it this way for a year and a half because I just wasn't making money with SMT by itself. But whenever I used it with other, very important areas, that's whenever the money started to roll in. So, it's just like this is the bank holiday. We can look for more opportunities here. I'm sure I've traded it more than once. Yeah, so from here, you can see how this one made a higher high right on the VWAP, right? So right on the VWAP made a higher high, and this one over here made a significantly lower high. And from here, it's just been chopping around, chopping. It's very, 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 very ugly. But from here, you could wait for the displacement and watch it fill in a fair value gap and whatnot, but you could enter in here, and the stop loss would be roughly above that, swing high or whatever, and you can look for a short opportunity going down here. I don't know what the daily time frame. I assume we're bullish. It looks like we're bullish. I wait for a more of a bullish opportunity rather than looking for a short. But even from there, you can see a 1 to 5 opportunity get presented, and it pays out. 2 hours, 2.5 hours, maybe at 2.5, 2.5 hours to pace out. But anyway, that's the general idea between the British pound and the Australian dollar setups. SMT was there, made the higher high. This one made the lower high. Obviously, new day opening gap fed into new week opening gap. It's like the same thing over and over and over again, and that's the only opportunity that I would take, to look somebody to take, So I wasn't. I guess the market was not interested in fitting into the fair value gaps or whatever. I know Forex doesn't respect fair value gaps as clearly as it does on Forex. I'm sorry, on Bitcoin and other crypto assets. However, opportunities like this are very nice if it had some volatility to back them up. But unfortunately, on these 2 days, it didn't. We can look on the daily time frame. We can take a look at what's happening here, as you can see how it dipped back down and took out the liquidity and immediately reversed. So we're probably looking for higher moves here. I'm not too sure, but I don't know a whole lot behind Forex in its daily time frame, nor do I really care. Again, I worry more about the 5-minute time frame, 15-minute, 1 minute, 15-second, 5-second time frame. I worry more about those than I worry about the opportunities on the daily time frame. Mainly because I do not trade daily time frame setups. So stuff like this. I mean, it's very, very cookie cutter, bread and butter type things. So we can look on just a random day whenever something would be popping off, right? So this right here, I mean, just bread and butter all day, every day, baby. I mean, this is just just consistent, constantly happening all day, all the time. So from here, higher high over here, lower high. This is on the previous weekly high or low. This is on the daily. The new day opening gap. So from here, I mean, it's just such a repeatable system. And from here, you can see a shorter high. The lower high here. Put the stop loss at the high. You can have the full TP get done all the way over here near the VWAP. You could even go all the way down to the London session. However, we're bullish and whatnot. This was the lower end of that. Swept the liquidity. Now we're looking for the higher moves. So we could even outline that on the daily time frame just to get an idea. So over here, right on there. Now, excuse me for the microphone. I am on vacation. Well, I say vacation. I'm working, but I'm traveling while I'm working. So from that same area, what was it? Where was it all the way down here? There you go. So took out that liquidity and immediately started to make. First of all, what I want to outline is from there to there. Notice 705 immediate rejection. What a coincidence, right? So from there. I'm talking more about the SMT now, right? So from here, we are looking for the price to start to go bullish. We're no longer interested in it continuing down lower. So from here, new day opening gap. I mean, from right here, just cleared it in, touched that little line one more time. That's the same. Notice how that line is the same exact line that the new day opening gap opened at and hit it. Just like this, and then what a coincidence, SMT hit one more time from this low to that low, lock it in, and from this low to that low. I mean, you see the difference, right? And you see that SMT start to develop, and from here you see the displacement. You could put your stop loss near the lows, and then you could put your take profit near the highs. Maybe new week opening gap. Maybe you can go for the London session because we are looking for bullish moves, right? New day opening gap up in here. And you can hold for that 1 to 10 opportunity for the next day and a half, maybe 1 day, just about 1 day. And from that's 20 hours, 22 hours. And from here, it's going to be a while for you to get your TP, but that's a 1 to 10 if you went for, you wanted to swing it or whatnot. But me personally, I would rather have it new week opening gap. I say new week opening gap. Whoops. The weekly high and low, I'd play a little bit more conservatively than that. 1 to 6, I would do relatively high leverage. And once it hit that, I mean, you can see the market approaching this on the New York AM session, higher high, lower high, and immediately the market would reverse itself back down lower. And from here, higher high, lower high. And from there, remember, enter as it starts to go down lower and against you. Hit the TP for 1 to 8. Over here was a 1 to 6.15. I mean, could you really ask for anything else? Because if we're looking at this honestly, and we say, well, the market gave me a 1 to 6.15. That is pretty remarkable within itself. And then immediately afterward, it gave you 1 to 7.67, right? So if the market is willing to give you these kinds of opportunities back to back, how greedy are you where you're looking for more opportunities? You understand what I'm saying? So from here, you can trade Bitcoin, you can trade everything else, but are you able to trade these opportunities and still keep a level head if you're not to lose everything, right? So this is just what reminded me from watching the videos that I watched today. And it was very sad to see how everybody was losing money. I was watching a video of TJR. It was a clear-cut, perfect opportunity for an SMT short on the NASDAQ versus the ES. And what happened was he went looking for longs. The market completely reversed, and he lost over $200,000 trading both assets, NASDAQ and the ES. I assume it was $100,000 each. He had a $3 million account. I was looking at this and I was like, man, how it's right under his nose. He just doesn't see it, you know. So it was like a bit of proudness in me. I guess a little bit of pride within myself, saying, I know that and he doesn't. You know, look at that, you know. But looking this from outside of myself, I'm saying, dang, you know, the opportunity was there. He was on the opposite side of the market compared to what I would do, and look how the market completely reversed and he lost a lot of money. So looking at it outside of myself and looking at it within myself, I can see the differences between my setup and his setup. And I'm like, wow, yeah, this really is basically telling you how the market moves and how the market behaves. And if you're able to take advantage of what the market is literally telling you right in front of you, you will do very well. So I've gone in depth on NASDAQ. I've gone in depth into gold. I've gone in depth on Forex, crypto, different kinds of crypto strategies, different kinds of NASDAQ and gold strategies, different kinds of Forex strategies. Crude oil, I'm not too worried about making an in-depth version of that. Natural gas is already over. It's been over for like 3 weeks, 4 weeks. Natural gas, I touched on that a while ago. I think the video is private. It's unlisted. It's an unlisted video. But for crude oil, I think that ship is ready to sail. I don't think it's going to be as popular as it was, as the billionaires and higher class of the world are looking to take their profits if they haven't already. But with all that stuff being said, I tell you that there's a lot of opportunity here in the marketplace, and I think that if you're able to harness a lot of these things and plug them in the right areas and use them correctly to the rules, I think you'll do very well. However, there's been a couple of times where I introduced a strategy that was quite simple to the public, and it was not, it was not traded correctly, and it's like I was held responsible for the misfortune of other people losing money and whatever accounts and whatever else. So it is a bit strange being in this position. That's why I like to say I'm not responsible for you to lose any money, because if you don't do it correctly, you just don't do it correctly. And on top of that, I don't mean to insult any of you, but if your intelligence level is not quite as high as it needs to be to understand something this complicated, or I guess maybe complicated, then that responsibility should not be set on my shoulders. It should 100% be set on yours, because I don't have any control over that. But the rules are there. Everything that you need to know is there. I might not be uploading as many videos. I might start uploading live trades here soon. But to set the stage here, my objective with this channel is essentially to display my own capabilities, I assume. Now, a lot of people, they're smart asses and whatnot. They're smart guys, right? So they would say, if I actually had an edge and if I actually had something, the last place I would go to is the internet. You don't understand that if people like something that you have to show, you can make a shit ton of money in that. However, I'm not the kind of guy that worry too much about popularity and fame. I just go out there and I tell the truth as I see it, and really the truth is just as it is, not only in the stock market but just in the world in general. But once I make that known, then I stand on it very firmly. So as far as the stock market is concerned, all my strategies and all the things that I've spoken about are here, and they're crystal clear. I have not kept a single thing away from the videos. There's not a single little nugget or secret or whatever that I wanted to keep within myself. I think that all these things I found within my own abilities and through ICT's teaching and using my own intelligence to go ahead and take care of these kinds of strategies and put them into practice and improve on them and whatnot, and do as I see fit in these kinds of things. And I think that it's done me pretty well. However, it wasn't always easy. It's been 5 years coming. here in November it'll be 5 years, so that'll be interesting. But yeah, in terms of the direction of the YouTube channel, I'd very much rather post live trades. I won't speed it up or anything. I don't enjoy having my videos edited to the attraction of like a Gen Z type person or a type attention span. I like you seeing it right in front of your face, and you could see second for second how I'm looking at the marketplace. And um, if you want to watch that, I guess you can. I mean, for those kinds, I guess I'll let an editor take care of that. I don't know if I want to be popular or not, but as far as fame goes, I truthfully, in my heart of hearts, I don't really care about being famous. I really do just want to show the truth about things. But if popularity comes from it, it wasn't my objective. I just wanted to go and share the truth as I know it. But at the same time, I think fame or whatever, once this starts to take traction, I guess it's inevitable. So um, fame might be a good thing. I've never had it, so it might be a good thing, might be a bad thing. I'm not too sure. But from what I've seen through other people, I don't want to have any part of it. But yeah, I think I'd very much rather take this strategy for my channel. I think I'd rather take this strategic approach of doing things in its full length, because I know that things can be skewed and misrepresented and taken in the wrong way. And there's going to be people that will take the strategy and whatnot and bastardize it and do all the different kinds of things and all that. But if you imagine, um, the best place to go and get information is from the source. My videos are not too long-winded or anything like that. I think the longest one is like an hour long, and that's like the longest one, right? So, um, yeah. With all that stuff being said, I think the this is going to be my last strategy explanation video. I think everything else is already in PDFs and it's all tucked away on paper, and it's also printed out, also on Google Docs and stuff like that. But I think the direction of the channel is just going to be posting live trades. But anyway, it'll probably be some time for me to do that anyway. I'm not really too interested in getting that stuff done. I've got to figure some stuff out prior to doing that, protection and whatnot. But yeah, that's it.